Hi, this is PinchuTV, a Philippines addict slowly building a Philippine stock portfolio on the long road to an SIRV, the Special Investors Resident Visa, and a move to Manila. This is my weekly Philippine market wrap. Quick disclaimer first. This show is a personal investment journal and general information. Nothing here is a recommendation to buy or sell any security. Please invest at your own risk. So, how was the week of July 20th to 24th? In one sentence, last week's gains vanished in 5 days. The PSEi, think of it as the Philippine version of the Nikkei or the Dow, fell 1.92% for the week, closing Friday at 6,281. Just a week ago, we were celebrating the best levels since March, above 6,400. Monday actually looked fine. The index climbed to 6,415, a fourth straight day of gains. Then Tuesday dropped 1.3%, Wednesday another 1%, and Thursday and Friday were basically a stalemate, just below 6,300. Three things knocked the market down. First, oil. The conflict between the United States and Iran escalated, and Brent crude hit $100 a barrel. The Philippines imports nearly all of its oil, so expensive crude flows straight into gasoline prices, electricity bills, and inflation. Fuel prices already took a big hike at the start of the week, a direct hit to jeepneys and tricycles, the everyday transport of ordinary Filipinos. With core inflation already at 4.4%, above the central bank's 2 to 4% target, this is genuinely painful timing. Second, the peso. On Friday, it slid to around 61.85 to the dollar, a fresh, all-time low. Costlier oil means the country needs more dollars to pay its import bill, and that expectation keeps pressure on the currency. If you're listening from Japan, a weak peso makes a Philippine holiday cheaper, but on the ground it means pricier imports. In other words, more inflation. As someone holding peso assets, I can't exactly cheer. Third, tariffs. On Friday morning, the US Trade Representative announced it would raise tariffs on Philippine goods from 10% to 12.5%, citing insufficient action on forced labor issues. The Philippines is one of 60 countries and territories affected, so it wasn't singled out. And crucially, the biggest exports, semiconductors, bananas, coconuts, nickel ore, are reportedly excluded. Not an economy-breaking event, but the market didn't like it. Now, some brighter news. Thursday, July 23rd, was Philippines-Japan Friendship Day. It marks July 23rd, 1956, when the peace treaty and reparations agreement between the two countries took effect, normalizing post-war relations. July is officially Philippines-Japan Friendship Month, and this year, 2026, marks exactly 70 years. Both governments have declared it a friendship year, with jazz festivals, symposiums, and cultural events running in Manila and Tokyo. As a Japanese investor holding Philippine stocks, I'll admit it made me a little proud. On to companies. First half earnings season has begun. BPI, one of the big three banks, led off with a first half net income of 32.8 billion pesos, essentially flat versus last year. Revenues actually grew 12.4%, but the bank set aside 13.3 billion pesos in loan loss provisions, up 84% from a year ago. That's money reserved for loans that might go bad, a sign banks are getting cautious about the economy. I'll be watching provisions closely when BDO, the biggest bank, reports next week. Meanwhile, Mynt, the parent of GCash, the everyday mobile wallet of the Philippines, has filed for an IPO of up to 92.3 billion pesos, one of the largest in Philippine history, reportedly targeting a fourth quarter listing. Whether a deal this size can succeed in a shaky market will be a good thermometer for the whole exchange. And one more milestone. On July 14th, port operator ICTSI became the first Philippine-listed company ever to top 2 trillion pesos in market value. As for my main holding, Jollibee, in a week of expensive oil and a weak peso, input costs are the worry, and my position is still underwater. but I believe demand for eating out remains solid, so the plan doesn't change. Every time dividends pile up, I buy a few more shares. What am I watching next week? 1. Earnings, starting with BDO. How well can companies absorb the triple headwind of oil, the peso, and tariffs? 2. The first phase of the 85 peso minimum wage increase in Metro Manila, which took effect July 25th. Good news for workers, but a possible inflation driver. 3. The US-Iran situation, oil prices, and whether the peso breaks into the 62 range. And 4. Any comments from the central bank, the BSP, on the inflation risk. One local broker, COL Financial, still says the PSEi could reach 7,500 by year-end, while honestly putting the odds at only 20 to 25%. Whether that call survives depends on the earnings we're about to see. This was a sigh-inducing week, no sugarcoating it, but I can't control oil prices or exchange rates. What I can do is read the earnings carefully, avoid panic selling, and keep buying little by little within my means. Like 70 years of friendship between the Philippines and Japan, investing is a long game. If you enjoyed this episode, please follow the show and leave a rating. It really helps. See you next week. This was PinchuTV. Maraming salamat po.